What's up, money lovers? Welcome back here today with a special guest, none other than the passive income investor himself. Thank you for joining me here. I've been following your channel for a long time now, since the early days of when you were selling gold and using the whiteboards and stuff. So it's been awesome to follow your journey with your YouTube channel as well as your portfolio. And you were one of the main channels that I used to watch that really inspired me to start my own channel. So here we are now, 940 subs. It's not much, but it's honest work. So thank you for being here today.
Oh no, man! I definitely appreciate it. I didn't realize I had that much of an impact on your investing career. Just kind of showing some insights. Yeah, man, that was a while back too. I remember that first video I ever posted. I sold, I think, almost $30,000 worth of physical gold and silver. That was a pretty pivotal moment to start off my YouTube career when I had like no subscribers. Didn't really blow my channel up any, and I'm not that big anyways. But I appreciate just offering some of that insight there. But my God, man, the markets are getting wild.
Yes, they have been. it's
Lots.
uh it's just been bloody out there, Facebook. And then I thought, all right, I have my safe stocks, Clorox at least today. Clorox goes down $20. I mean, really can't catch a break this week.
Yeah, for sure, for sure. I don't know if you want to dive into Facebook first. It seems to obviously be the
Yeah,
most
definitely.
dramatic
So
of the
so yeah,
competition.
definitely. I know you posted a video about Facebook. I guess if you want to walk me through, your thoughts on where you currently stand on Facebook, and was it your biggest holding? I know it was one of your top holdings. What were your thoughts and reaction to the earnings call?
The earnings call disappointed me. I really don't think people do enough of their own due diligence in the first aspect of things, and I'm going to expand because I know I piss people off when you start scaling down your highest conviction trades. But yeah, no, man, the earnings just I love the company. The company's in a great spot, tons of cash, never going to bankrupt. They're going to be fine forever. I mean, they were growing extensively up till this last earnings when we're talking about user growth specifically. But my conviction as it being my highest investment changed because I just can't figure out how they're going to get to a 15 to 20% like just growth rate off the revenue, because what I'm seeing them do from the earnings call is patchwork, and I feel like that patchwork isn't going to add to user growth, so I don't see the value in it, particularly outside of the audience they already have. So like Instagram Reels, for example, is a big proponent that they've been trying to work on, but when you look at the growth, I feel like they're catering to millennials and boomers that primarily use Instagram and primarily use Facebook or whatever, right? Now that user base is massive. Like by all means, they're going to be able to cash flow off this shit forever. I just felt like, I'm holding this company because I'm getting a fundamental base of a 15 to 20% growth rate while I get the upside of the future with VR, AR, et cetera. Now I feel like, that growth rate isn't going to be able to keep up for the foreseeable 2, 3 years, whatever. It makes sense for the stock to pull back to come more into a moderate price to earnings multiple of probably in the teens here makes a lot more sense than say in the 20s or 30s. I don't mind overpaying for companies if I'm going to get the growth rate I'm expecting. So, like Tesla, for example, crazy overvalued in my opinion, but I can project that that company is going to be growing for the foreseeable next at least 3 to 5 years at a 50% clip. So, I mean, so long as I'm getting that kind of a growth rate, like it doesn't matter if Tesla drops to 300 because the fundamental business is still going to be astronomical on every earnings call, right? So, don't get me wrong. I still hold a lot of Facebook stock. I mean, we're going to take a look at my portfolio and in a little bit here, just to give some hype for people that want to stick around. We'll get into the actual entire 373K portfolio, but I still own 44 shares of Facebook. I just can't have it as such a large weighting when I'm speculating on their future being their AI, their supercomputers, their augmented virtual reality. I just feel like I have to take that with a grain of salt if I'm going to speculate. And again, I kind of want to framework it to Tesla, but because Tesla's revenues and earnings aren't there yet, it's kind of hard on a valuation basis. But again, with Tesla, I'm getting a 50% growth rate on their current business. Well, you get the upside potential, the riskier aspects of their business with robotics, self-driving, and all that other stuff, right? But that's kind of how I come out of that earnings call. I wasn't too happy about what they discussed. I wish they were a little bit more I don't know. It just didn't make me happy, man. I just didn't come out of it as excited as I did with Apple or Tesla or Microsoft. When you listen to those earnings calls, like they excite you. I did not come out with the same excitement. The stock
Right.
dropping is irrelevant. I mean, I don't care what the stock price is going to do. I mean, if you're trading a stock off the price, you're not making the right investment if you're a long-term investor. So it'd be, the business and how you feel about it more pertainably, right?
Right. Yeah. And Facebook, I mean, they definitely have a bunch of headwinds hitting them at the same time. You have TikTok stealing their lunch. The trends are just shifting. And I feel like the Reels pivot, it could be good, and even though they're saying, it'll have a lower monetization rate at first, I feel like Facebook has always been good at, whenever there's a big problem like this, they've always been able to pivot, they've always been able to adapt. So even though in the short term, I'm sure their revenue will take a hit due to that, and they said they were going to focus more on Reels as opposed to like newsfeed and stories and stuff like that, even though those are the more profitable parts for the ad business. So it's definitely going to take some time, but I feel like they will, make it work. But then, they also have the whole Apple issue, which is really just messing with their core revenue stream there. And yeah, the picture is a lot different. And like you said, I would have loved some more positivity on the earnings call and maybe some more stuff about, Oculus and the metaverse, but
or
they
even
really
crypto,
did.
right? Like any of
Yeah,
that stuff.
they didn't really hit on any of that. And the fact that then, the Oculus or Reality Lab segment, they burned $10 billion on this year, and it brought in what, like 700 million in revenue. I mean, did
Yeah,
they even
so
touch on?
I'm a little confused by that statement because I've been reading that in headlines, but I don't know where that data is being pulled from. No one's offering references to that because what I heard was that they are like, because these numbers from CNBC and shit are just so dumb. Like they didn't lose $10 billion, say, because that's what I thought was said on the earnings call, was that we lost 10 billion because Apple's taking away some of the, the idea of being able to do targeted ads, and they're estimated that they're losing about 10 billion. I didn't hear anywhere where they were losing 10 billion in Reality Labs. From what I heard is they spent $4 billion on Reality Lab. Now, whether that's expanding into the other aspects of the business, but I only heard 4 billion, and they made about 1 billion off Oculus so far, just in like the store sales and the game downloads and stuff like that, which again, I wish was more clarified on the balance sheet release and just the earnings release. Because if you didn't listen to that earnings call and you're listening to CNBC, I feel like a lot of the numbers are getting skewed because they're not finite direct numbers. It's not like, oh, we lost exactly 10 billion. The guy literally said, we don't know, we're estimating the loss of the value, right? So you kind of got to take it with a grain of salt. But by all means, man, don't be bearish on Facebook. We're talking about a company generating the best margins on the S&P top 10 still. Like this company's gonna be a cash flow giant. You're not going to see it at this scale when you have like 1/3 the population using your apps. You're not going to see it growing at an absurd pace from a
Right.
user base, right? Especially with competition. But I'm still bullish, man. I still like Facebook a lot. I still think they're an incredible company, right? But yeah.
Yeah, I would agree. I feel like a lot of this, short-term noise, it's going to pass. And yeah, like you said, I think their monthly active users it's close to 1 in 2 people on planet Earth use one of either Facebook, Instagram, WhatsApp. Like I think they're gonna do fine and figure out. And yeah, like with the Apple hit to their revenue with the iOS changes. All right, so even in the worst case, let's say they lose 10 billion in revenue. I mean, they're still bringing in like a ridiculous 80 billion a year now instead of 90 maybe. And like the pivot to the metaverse, like obviously this is further down the line, but I would love to see a scenario where like they can get away from being so heavily reliant on the App Store and maybe something through Oculus. There it is. I got mine over here too. I should grab it.
I love it.
But maybe making their own type of app store within either Oculus or the metaverse, and then now they don't have to answer to anyone. They can they don't have to be hostage to Apple. I would love to see something like that pan out down the line. But yeah, definitely a hit in the short term. But like you said, if you believe in this company long term, which I do, it's a great buying opportunity. And then as far as the Reality Labs and Oculus, yeah, I was surprised not to see any like I wanted to see how many Oculus they sold, which they didn't mention. They mentioned it was the #1 app on Christmas Day. I know they're selling them at a loss, but I would just think at some point like they've got to be taking a cut of like the in-game revenues and stuff like that. So it's got to take off eventually.
Yeah, Facebook is very methodical. Same thing with Apple. And I think they kind of have their own little bat cave like Apple does, where they don't want to just shill anything out until they're like concrete on exactly what's going to happen. Because a lot of people, and some of the things that disappoint me with Facebook is that they're not fully monetizing the full extent of their platforms yet. So I figure even though, we might have peaked in user growth, it doesn't mean that there isn't huge ways to optimize the bottom line income off of those. It's just a matter of how they go about doing it. And anybody that uses Oculus or VR, I don't think they can appreciate it enough until they use it, because because I always hear like this criticism that, oh, the quality's not great, this is too early days, and this and that. Facebook's not a good innovator. They're dinosaur company. It's like realize that they bought Oculus like 6 years ago. Like this thing has been evolving, and to where it is at today has blown my mind. Like I love sitting down and playing, poker. I think their version of poker is better than what Poker Stars has on the computer. Like some of that stuff is so interactive, so much funner, so much more engaging that like you can't see them not putting some ads in there. Like how hard is it to throw a few ads into these games and start generating a whole nother revenue stream, let alone again like the downloads of games, like just the incredibly large amount of experiences on VR. And it's just one of those things I don't think people appreciate until they try it. But like I said, I'm still bullish as hell on their future. I think they've got a great foothold. They're probably one of the indicated leaders in the virtual and augmented, and they're saying they're going to drop a new VR headset this year, and they're still working on dropping some augmented technology as well, which I think the augmented will hopefully play into the next VR drop. Because I've seen some use cases with the current Oculus, and basically the differences between VR and augmented. One of them is purely in the headset, kind of digitalizing the world around you, and then the augmented is taking the world around you and digitalizing it through the headset so you can
Right.
interact with stuff. And I've seen videos of people using it on pianos, for instance, because the Oculus got cameras on it, and it could actually lay out the piano and actually bring down the chords that you have to hit, like Guitar Hero. So you could actually learn songs on like a real world piano. And I think people are under appreciating the scope that that's going to have on different industries, whether we're talking education or just the way we interact with new features of learning. I think, like I said, I am unbelievably bullish on the outlook for Facebook still. But I don't know if you want to move on. I can talk about
Yeah.
Facebook all day, man.
Yeah, I mean, no, this is great. I mean, and I definitely agree. There's so much more application. Um, like you said, like with learning, it could just make the educational experience so much better. You could teach people how to fly a plane. I mean, if this thing's getting like so advanced, it's just really incredible. So, like, where do you think, and this is something that I think Facebook has been criticized for from the start. That was always the problem. It's like, oh, it's this great network, everyone's using it, but they're not making money. And like you said, Facebook has always done something awesome and figured out how to monetize it later. And I think that's what we're going to see play out with this as well. What can you see, eventually with Oculus? Do you think they move to like a monthly subscription model like Xbox, or do you think you can see them picking up like some game developers? I don't know if the FCC is going to allow it, but
I think I think it matters more right now is just kind of making it so it's a streamlined setup and system for gameplay with other people. I know they're working really hard on their Horizons world, which I haven't used as much, where you kind of build your own metaverse platforms and invite friends. But more particularly, I'm just more intrigued to see them integrate across all the platforms, because what Xbox has that say Sony and those other companies don't is just the full experience of being able to augment off into all the other VR headsets. Because if you a lot of the games right now, the developers are making it so if I'm playing a game with Oculus, I can also play a game with Sony's version of the VR. And I think I want to see that ecosystem build out in a way where it's just more cohesive, because that's the problem with Microsoft, right? Some games are exclusive to Microsoft, some games are exclusive to Sony. I could see Oculus doing that to some varying degrees, but like I said, there's so many experiences on it already. I feel like that they're at a point now of they've proven the technology works, they've proven the engagement, it's exciting, it's very technologically advancing. So now it's just a matter of let's get into saturation, let's get more people using it. Like I said, we don't know exactly what this is going to look like, but we have a really good idea of where it stands today. So I'd give it 3 to 5 years. I don't see them making real money off of it, at least for the next 2 to 3 years. But in the meantime, they're still bringing in huge revenues. I mean, we're talking over $1 billion on this product that was more popular during the holidays than the Sony PlayStation was by Google Trends data. So I mean, and it's gained traction year over year. It's not something that's just built up and dropped off. So that gives me a little bit more comfort in the long-term outlook of it, because again, it's not like people are picking it up, getting bored of it. Though I know some people say it's collecting dust on their shelf. I haven't found myself getting bored of it yet. I'm using this thing still 2 or 3 days a week at least, and I've owned it now for 3 months. And I kind of get itched when I'm not using it, to be honest. Like if a week goes by and I haven't used it, I'm like, man, it'd be so much fun to get back in there and and just mess around with some of the subscribers that join me, or just get into some of the games that I'm really involved with right now. Yeah, I mean, like I said, I'm very bullish on that that outlook, to say the least. But yeah, man.
I
What
would
about
definitely agree.
what's your Tesla thoughts here, man? I want to talk Tesla a little bit as well.
Yeah,
That's a whole
so
other-
definitely. So yeah, it's been a week or two since the Tesla earnings call, and I feel like these always take me a week or two to process, because right after I listened to the earnings call, I was a little bit like, we're doing what now with this humanoid Optimus subprime? But then the more I think about it, the more time that passes, I'm like, wow, like this just makes sense to me. I mean, what did you think about the earnings call and all these crazy robotics?
I think everything that they're going to do up front is going to get criticized nine ways to hell. It has been since the company's been innovating. But the thing that I like about it most is how much people argue about the same shit they've been saying since 2018. I always find the bear case on it always comes back to them comparing it to the other automakers, and I think they're under anticipating the value of the brand. To be honest, I'm over bullish because I do think the company is extremely overvalued, but I think they can grow into their valuation purely just based off car sales. Now, that's highly debatable and highly speculative. I get it. Don't buy Tesla if you think it's just an overvalued company that's worth 10 of the largest auto companies. I get it. All those other companies are outselling, still by the internal combustion engines, whatever. If you don't want to buy it, I get it. For me personally, however, I still think they're going to end up dominating 30 to 50% of the US auto market. I think globally they're going to get a sustained footprint. If you want some anecdotal evidence, I mean, go to Norway, because Norway right now is the leader. I think 70%, maybe a little higher. I know it's over 50% of new cars sold are all electric vehicles. And of those, the vast majority of them are Teslas. And it's kind of impressive to think that Tesla doesn't even make vehicles in Europe yet. So for them to be dominating some of these countries already and leading EV sales is pretty astounding. But I also like the fact that they have a footprint that is similar to what Apple and what Nike did in the early days. And again, being a long-term investor, I'm trying to figure out where the growth is going to come from in the next 3 to 5 years. I think there's going to be some issues, obviously scaling, fully building up manufacturing. I'm willing to wait on that. But where I see the real excitement in Tesla coming from is the next generation, because we're going to have 15-year-olds over the next 5 years. That whole teenage generation is going to get driver's license. And what do they talk about? What are they going on about all the time right now? I know people that are renting Tesla just so their kids can experience them. And it is going to be a massive shift in consumer demand from the current brands that exist, because I even know people that are millennials that are driving in Mercedes and BMWs that have leases coming up right now that are trading them in for Teslas. And it's just, I don't think people appreciate what that branding power is going to evolve into over time. And the only thing I can relate it to is, again, look at what Nike did back, go back 20 years and look at the impact they had on the youth because of Jordans and the evolution of that. It's not the adults I want to listen to that are all about their internal combustion engines. It's the next generation, the next 5 years. And Teslas are affordable to them, right? It's not like this is a Lambo or a Ferrari. And the fact that it has better performance, just it's such an intriguing, exciting thing for kids. So I think that's one thing one thing that I pay most attention to. But talking about the other aspects of their business, like I said, the same thing that I had a high conviction on with Facebook is the similar conviction I have with Tesla. Is you're getting this fundamental business that's going to grow at a 50% clip for the foreseeable next few years. And then all you have to have is one of these aspects of their business work out. And they're investing billions and billions of dollars, right? It's like buying a small cap growth stock. If you're buying SPACs and these other growth stocks, you're buying things that don't exist yet. You're speculating heavy on the future. So at least with Tesla, you get a fundamental base. Again, you're overpaying for it. But if self-driving comes into full fruition in the next few years, if these robots end up coming into play in a major facet, which I think they will as well, and they're going to be the leading innovator on that, I'm again, and we're not even talking about the energy side of their business, because another complaint people had was, well, what about energy storage? This is going to dump up I think it's like 100 to 300% energy demand on the utility grid. And I'm working with utility companies right now that are trying to meet that demand and scaling up the infrastructure. But Tesla's going to be a part of that infrastructure build. And I think people don't appreciate that massive ecosystem. I mean, they shit diamonds, in my opinion. Tesla is shitting diamonds in every aspect of their business, whether you're talking about the network of charging stations, which is the largest globally, leading in that industry. I mean, they're building these mega pack battery systems for Texas to test out. They're doing it in Australia still. And I think if any of that works out even to a slight extent, and you get this crazy fundamental growth rate in their auto business, we're talking about a company that has the capability of being the largest company on the planet. And people say that because you have to look at the market cap capability, right? I mean, when you look at the total market cap scale of the phone industry, when you look at it across every sector of every industry, what are the biggest market cap industries? Energy, autos. So it's not hard to imagine if they cap in 30 to 50% of some of these industries. I mean, we're talking about trillions and trillions of dollars in market cap capability, right? So that's why I think people don't fully grasp. And again, it's speculative. A lot of it is speculative, and there's a lot of risk that comes with that. But I think if anyone's going to have the capability of pulling it off, and I'm going to take a risk bet on it, I'll take a risk with Tesla. But keep in mind, I've been here since 2019. I haven't been buying it yesterday. Well, I was buying some shares, back in the 900s here, but people need to understand my buy price might be a little different than theirs. So I'm cushioned a little more to the volatility at this point, right? But I'm a Tesla fanboy. I mean, what can I say?
Definitely. No, I agree with you there. And same, like I've been buying it since 2019. And I think you just hit it all to a T. Honestly, like everything I had here, you kind of covered, I think. But I think you're right. I mean, we're going to see 50% growth in the EVs, and the EVs are phase one here. And the fact that on the earnings call they said that they could achieve that 50%. See, this is stuff that was overlooked with all the headlines. They're going to achieve 50% growth just out of Fremont and Shanghai, not even accounting for a single car coming out of Berlin and Austin, which is mind-boggling. I mean, that means if they get anywhere near any type of ramp of production, I mean, you're going to see them do way more than 50% growth. But anyway, so that's phase one. And then everyone was mad about they're not doing the 25K car yet, and they're delaying the Cybertruck. But when you think about it, it makes more sense to focus on the FSD because it would create 5 times the value, and so in essence, then even if you're buying a $50,000 Model Y with FSD, it becomes a cheaper car essentially than buying a $25,000 car. And I think the potential there, like it's just going to be absolutely nuts. And the fact that they think that by the end of this year, that could be what did they say? Definitely better than a human, but that's not a high bar. But it's getting there. It's going to be the next couple of years, and that alone, I mean, it will just open up tremendous revenues if they could license it out to people. I mean, the potential there is nuts. And then obviously, you have all the other sustainability, just going the full package with your home. The solar panels, the batteries. I mean, like you said, they only need to hit on one of these, and then they've got the robots coming, which I think is actually a lot more feasible than people are realizing, just because with FSD, you basically already have a robot. It's a computer on wheels. And like, if it's able to navigate, they can apply that to, a robot that now could work in their factories, which will then, this adds to their other competitive advantages of more efficient, cost effective, assembly in the plants. I mean, they're firing on all cylinders.
I think, yeah, what a lot of people are missing as well. Now, don't get me wrong, like I'm highly critical of Elon because I mean the guy is over bullish on getting this stuff done in a timely manner. But you have to remember Elon's the only one offering time references, which is a mistake. You never offer time references, but this is why nobody ever brings up Ford, GM, or these other companies because they don't put real time frames on these technologies because they just like nobody actually knows when this is going to become viable. But I think when it comes to Tesla and the robotics side of their business, what people should be most paying attention to, because I know a lot of people are like GM, Ford, Toyota fans, perhaps. What they don't understand is the factories. I think one of the biggest footholds that Elon mentioned they have and their biggest competitive advantage is their capacity to pump out basically 2 to 3 extra vehicles for every one vehicle a competitor can pump out. And a large of that already is coming from the sustainability of the robotics, right? I mean, they are the largest and most innovative and automated factories that have ever existed on the planet. And I just don't think people can appreciate the experience and what that brings to them compared to competitors. And another thing I got to say about competitors is a lot of people just think that Ford and GM, because they make cars, they can just magically snap their finger and do what Tesla did. And I don't think they appreciate enough about what it takes to flip over a factory line. It's about a 4 to 5 year process to fully flip a factory line over to a new product production. And when people are seeing that these other auto vehicles are starting to come out from these companies, I don't think they understand that that vehicle ramp up is going to take another 4 years, 3 to 4 years. We're not going to see GM fully pumping out their EV lineup till 2026. And it's just like, and people think because like these pre-sales are looking pretty good, it's a matter of they haven't delivered a single real vehicle yet. Like they haven't really pumped out any scaled vehicle that proved that these vehicles are going to be viable still, right? So, I mean, I think it's going to be a lot harder for the competition than people are appreciating. I think they're not going to go anywhere. I think that if you're more of a fan of a competitor to Tesla, I think you should get away from your GMs and your Fords, if I'm being honest. I think where the real competitive edge with Tesla and their biggest competition is China. And a lot of people need to look at the global auto sales and realize that like GM, Ford, they have been losing global auto sale advantage a lot. I think they've lost about 50% of their foothold in the auto market, and that's not coming back. And they're losing even more while they wait, while people convert over to EVs, right? So you're starting to see the diminishment. I made a bet this year that I think Toyota is going to surpass GM is the number one selling car in the United States, because I think GM has about a 15% foothold, but that's declined rapidly year over year. And I think Toyota is going to surpass them, as I think it is the second best selling vehicle. But China companies already dominate the US and the Canadian markets when we're talking about like total vehicles sold. So I think if you're looking at competitors, I think you should primarily be paying attention to things like Polestar, which I think is owned by, it's either Volvo or Volkswagen, because Polestar is actually making an affordable EV. I don't like how GM starting off with, say, the Hummer. I think it's ridiculous to
Yeah,
start
no.
off with a six-figure boat of a car you'll never drive in the city. Like that's not.
How many of those are they going to sell? A couple hundred? I mean, yeah, it's but
It's
Mary Barra, you led.
yeah. So I mean that it just it's I would be more bearish on that and look at the companies that are actually innovating to the mass scale audience, right? So Polestar is building their own factory in Tesla, similar to what, or in Tesla in Texas, similar to what Tesla did. And Polestar, I think they're trying to make a $20,000 vehicle at mass scale, right? So I'd be paying attention more to those companies, because I think they're the ones that are going to pivot faster than I think. Well, I don't know. I have to look at some of the time frames, but I just think people are too caught up in the Western world view of their favorite old auto vehicles, and they need to wake up and get slapped upside the head that this is going to change a lot faster than they think it is, and it's not as easy as they think it is. So again, but that's the variable problems, right? Is I really feel like GM is a dying business still. They haven't proved that they can shift, yet the stock is going up. So it's a little misrepresenting the fundamentals of their volume dying down. And it's really intriguing to me, man. I just wish people were more educated on the subject, because I agree Tesla's overvalued. They miss on a lot of their stuff. There's a lot of problems with what they're doing, and I get it. There's no reason for you to be as bullish as I am for people watching this. So I mean, take it by your own prerogative. But I think people too loosely make statements, and they like to argue when they don't know what they're talking about. And again, I don't know everything, but I listen to people that are smarter than me. And this is all I do every day. And this is all I've done with Tesla for 3 years, right? Is listen to people like Sandy Munro, people that work for GM for 5 years, building factory lines in these traditional autos. Like, I think people need to sit down and realize that this is not easy to understand. And if you don't know enough about the different facets of these industries, that just making blanket statements like, oh, Tesla's worth as much as the next 10 auto companies, that's too much, it's all this shit, and then completely block out like what's going on in the industry is it's going to crush you. It's the same problem I have with Bitcoin, because I feel like I was the biggest bear on Bitcoin up till I think the beginning of last year. And it's because I was very ignorant to the entire ecosystem of it all. And I think that's the same problem a lot of people have, right? They hate on something for one particular reason and then block it off like there's no value to it. And even though I think NFTs are on the biggest bubble right now, I still understand the value of what that's going to bring, and I'm still sitting here learning about it every day. Like, I'm fully enthralled in NFTs, these different metaverse projects like Solana that's making what's their Star Atlas is coming out, which is a video game that's going to be completely driven from NFTs, and it's going to have in-game cryptocurrencies that can be traded outside of the game itself. Illuvium is going to be like a World of Warcraft Pokemon style game where the NFTs are the Pokemons. And like, I just like, because that's what you're going to miss out on, right? Like, you're going to miss out on these massive, innovative, forefronted projects because you think it's trash. And I think that's just ignorant to not take in everyone's opinion and just kind of come to your own conclusion. And like I said, I'm not the smartest guy in the world. I just, like I said, I hear people talk and it makes me want to slap them upside the head. I'm like,
I
please
definitely, yeah,
go do some
yeah,
homework and have an
right.
educated freaking opinion.
You
Like,
know, everyone kind of just lives in their own echo chamber, and
yeah.
this is just like a societal issue. Like, they just refuse to even acknowledge like facts from the other side. And just recently, even you still get these ridiculous headlines of like the most recent one I saw was Tesla's recalling 800,000 cars. No, they did a software update on them. Like, no cars were recalled. They didn't have to take them in. They literally just updated the cars. But like, so then everyone sees that headline like, oh, Tesla's recalling all their cars. Like, no, they're not. Like, you're not actually reading the articles. Like, it's crazy. But Tesla's definitely playing 3D chess, I think, while legacy autos are playing checkers. I guess moving on to what do you think for 2022? Got all this stuff going on. I mean, do you have like top 3 stocks you're looking to add to in 2022?
I'm always adding. I don't particularly have like favorited or hated positions, because like I'm not like Meet Kevin. I'm not somebody that just over leverages and makes like one stock 30% of my portfolio. So to pick one or the other is a bit of a challenge. I can show you some of the reweightings that I've done, and I'll actually just pull up my portfolio because I was doing a video on it today. For most people that might not know, I'm 100% transparent. I have been since I started my YouTube channel in 2018, and I kind of always show the growth and whether I lose money, make money, what I'm doing, trading, moving things around. And a lot of people obviously got frustrated that I scaled Facebook down, but it's still a massive weighting at 4% here. But right now, all I'm doing is I'm a little bit more hesitant toward the volatility I think we're going to see this year, because I think it's kind of funny how Apple, Microsoft, or more particularly Google and Apple dodged guidance. And I think when you're dodging guidance, it protects you from that fear that, yeah, no, Facebook's going to drop to an 8%. I mean, Amazon said their low end guidance for the Q1 is 3% against analyst expectations of 15%. And yet somehow Amazon shot through the roof, right?
Yeah, I did
So
not understand that at all. I mean, and this is what, I was just talking about in the WhatsApp group with some people. To me, Facebook's report was better because Amazon had these razor thin
yeah,
profit margins, and the only reason they even had a positive quarter was because of their Rivian investment. They got $11 billion from that. Talk about
yeah.
overvalued, but you take that away, and they lost money this quarter, and the stock goes through the roof. It just, I don't get it.
Yeah, it's definitely intriguing to see how the market's playing this, because large caps are starting to trade like penny stocks, and it's this is actually better
A
for
lot of
investors.
volatility.
Yeah, this volatility gives opportunities for discounted buys, which I think people should be most paying attention to and less bearish on the market, because I'm still extremely bullish here. It's just a matter
Mhm.
of like I'm looking for balanced control, because like I said, I don't want to get wiped out overnight, and I'm at any given point I'm prepared for an individual stock to drop 50%, right? But I've got global diversification across the Canadian US sectors. And I just feel like because I'm relatively exposed to the Canadian sectors with the Canadian banks that have just been outperforming this year, just crushing it, along with some of the other sectors I hold, like TELUS, which is one that I just added to yesterday. Like these are the companies that are what's kind of letting me ride out the volatility of my large cap
Mhm.
US companies, which are the largest part of my portfolio still, because I mean, between Bitcoin, Facebook at 4% now because it's pulled back, but between all my tech companies, I'm still almost weighted 30%. But again, I'm just a little bit more hesitant right now, and I don't want to be as largely weighted in any major way, because, like I said, nobody wants to get up and see 20, 30% mood swings on the buy daily, right? It's not a comforting feeling for people that are more involved in their portfolio. But like I said, I'm just diversified, man. I'm just diversified. I
Oh
like
yeah.
index funds. I like
Mhm.
tech stocks. I like Canadian stocks. I like buying all of them. And I'm always cost averaging in across the sectors constantly. So, I mean, like, I don't have a favorited company. I do have higher conviction companies. Like Tesla's my largest position by value, next to a real estate investment trust being my RioCan. So, I mean, I still have
Love me
like,
some Ryokan.
love me some RioCan, man. RioCan is an OG stock to me. I have a hard time wanting to sell it. It's like, I always love REITs, because if you own the right REITs, I feel like you have exposure to an ETF. I feel like a real estate investment trust is the definition of an ETF, because you're just owning all of these beautiful properties, and presuming you have the right management and the right properties and diversified beyond just say office or just retail. Like, I don't know how you lose money. The only problem I have with REITs is you don't get the upside of the real estate market, because they're disconnected from the underlying fundamentals.
Right.
But I'm bullish as hell, man. Like when I look at RioCan, it's nowhere near all-time highs, but people forget that like the underlying assets, because they own like some of the most premier real estate in Toronto, those assets went up 30% in value in the last year alone. And it doesn't reflect on the stock, but what it does for the underlying businesses gives them incredible liquidity. I mean, that company could pull line of credits off or cash out refinances. They could sell properties at massive capital gains and then reposition them into like retail and other projects. Like I just if even if real estate drops 20% this year from how much it's run, it gives those REITs so much liquidity in this market. So I'm really bullish on the real estate sector, especially here in Canada. Even though I think it's overvalued, I just think from a real estate investment trust perspective, ugh, beautiful. But yeah, I'm starting to add to a more index funds here as well, man. I'm looking at scaling those up a little bit more. But I'm just, yeah, overall diversified, man.
Yeah, I like. So I see some of your biggest positions was, you said Tesla. I saw like Apple, Pepsi. Those like your
Yeah,
top three.
yeah. So the biggest positions by far: Apple, Johnson and Johnson, Microsoft, Pepsi. Google's still a huge position. RioCan's a huge position. Like my largest positions weighted about 6 to 7% at the most. I try and not let anything get over 10%. Usually, if a stock goes above 10%, I'll sell it, just because of the weighting. Because I play usually in weightings. I find it's the best way to like emotionally tolerate your investing, because a lot of people like see their stocks run up, and usually the rule of thumb is if you wouldn't buy at this high price, technically buying it is the same thing as holding it at this price if you're not willing to sell it. And I don't like playing that game that much because, I think Tesla's overvalued. I think it could drop a lot at any given time, but I don't want to sell it because I think it's overvalued. Because I think 5 to 10 years from now, I don't think it's going to be overvalued, right? So from that perspective, I'd rather just play it by waiting. So, I'll keep it as a high conviction at 7 to 8%. If it shoots up drastically and it goes over 10%, once we get in that 11, 12% range, I might sell a couple shares, pull it back, lower, scale up some underweightings. I mean, that's actually what I did yesterday. I sold a little bit of Tesla. I sold one or two shares just to bring up Facebook because I was moving it between different accounts. But yeah, it's just these aren't like huge trades for me. But I try and make it unemotional. I think people get too emotionally attached. I get emotionally attached to the business. I try and never get emotionally attached to the stock. Because once
Right.
you get emotionally attached to stocks, you start making huge mistakes. It should just be a pragmatic game of just whatever your risk tolerance is. You should always do it by risk tolerance. Hey, if you like holding 30% of a company and you can handle that, that's your risk tolerance, then go for it. For somebody in my position that, is managing, over $300,000, I get a little more skittish because I don't
Mhm.
want to see a 100K position drop in half. I wouldn't be sleeping
Definitely not fun. Yeah.
easy. Just my personal prerogative, right?
Right.
But
Yeah, no, it's definitely, I mean, you can't lose with that approach because, at worst, if one of those positions goes down 50%, it's not really affecting you. Maybe you lose 5%, but nothing crazy, like you said.
well,
And
Facebook, man, dropped
yeah,
30%. It's barely a blimp on the radar for my portfolio. Like I didn't even notice it. I'm down thousands of dollars, but like in the perspective of the 300K portfolio, like you wouldn't have even noticed it happen because other stocks are up. So it's like it's a balancing act, right? So I
definitely,
feel more
definitely.
protected doing that. But what about yourself, man? What are you buying this year? What's got your convictions?
Well, my top positions are definitely Tesla number one by far, then probably Facebook, and then probably gets into the index funds. I think this year I'm probably just gonna from here focus on the index funds, and like it does get very tempting to buy some more Tesla when I see it hitting the 800s. But I'm like trying to like be good about it because it is my largest position. So I'll probably just stick to index funds, and like when I see a sale on something, I'll add to that. I also would like to build up my safer positions a little more, like my Johnson and Johnson, Clorox. I added a few shares of Clorox today on the dip. Just kind of like you said, just well rounded. Add a little bit here and there to everything, but I feel like we're in for a rocky year. These earnings have been like all over the place. Just no way of knowing in the short term. Good earnings, stock tanks, bad earnings could go up. Just craziness.
Yeah, man, it's definitely been a wild ride, but like I said, we've gotten too used to the stocks going up, and for most people, it's
Yeah,
probably the
definitely.
first time people have experienced volatility, right? I mean, I've been through a lot of volatility. I mean, it's not like the first time I've seen. I think March 2020 was the most volatility I ever experienced at scale because I my portfolio dropped 30 or 40% just within like a few weeks, which is pretty astronomical, right? But again, like I get more excited when stocks go down. I always get more intrigued when I see companies that I love, and again, Facebook is still an example. Like if I didn't own so much, I'd be heavily inclined to buy a lot more of it here. But I recognize, like you, I see the value in stability dividends that are going to give me that opportunity to continue to cash flow and buy into some of these other opportunities. I don't know. It's a game, man. It's a mental game all the time. But I hope people that are newer kind of listen to us and kind of get some solace in the idea that this shit happens and use it as an opportunity and perhaps a learning lesson if you didn't understand your risk tolerance, and hopefully you're not managing hundreds of thousands of dollars, because I feel like a lot of newer people might have 10, 20, 30 grand invested and they over leveraged into Facebook and then it just dropped 20, 30% from the highs. And now they're like pissed off, but I don't think they should be pissed off because if you're only down 10, 15, even 20,000, I'm sorry, but that's not a lot of money. I'm like, it's in the perspective of your investing career. If you think 10 or 20 grand is going to change your life in any major way, it's not. It's like you need to just be patient and just, learn these as experiences and use it as part of your just, philosophies as you build out how you want your portfolio to look. And like a lot of people right now, index funds are the way because they don't want to deal with that volatility. And like it just corrects them, right? It corrects their
Yeah,
understanding.
that's kind of where I've been at, just because I have a lot of positions, and like a few of the more speculative ones I have like some Palantir. These are the smallest positions in my portfolio. Maybe they make up 1%, probably less now that they've like crashed. But Palantir, SoFi. I've got this Voyager digital company,
Yep.
and they all seem promising. And like I think long term they will do well, but it is tough to just you see in the short term. I'm down 50% on some of these positions, while the index fund's just up 20% for the year. And at the same time, it's like there comes a point where like I just can't possibly as an individual keep up with 30 different companies. So I'm like, I might as well just be focusing more on the index fund. And these are companies I definitely still believe in. I'm not selling my shares by any means, but I think I'm done with buying the dip, because it just keeps dipping, and I'm going to focus more on definitely like the index funds. And but who knows? I mean, if Tesla went down 50%, I would be dumping everything into that.
Yeah, for sure, man. Yeah, that's definitely intriguing. I like a lot of the small caps. It's like the hardest problem because I keep telling people like I'm not buying small caps or Chinese stocks for that matter until I know there's a base to it. Because a lot of people have been preaching that buy the dip, buy the dip, buy the dip. They've been saying that for a year now, and it's a painful
How's
thing
that
to
working
stomach.
out?
Yeah, I think it's most painful because like the reality is like you said, like everyone, no matter who you are, whether you're a hedge fund, whether you're an individual investor, at the end of the day, you're always going to compare yourself to the benchmark. That is the generalized rate of return of the markets. And that's where everyone always will funnel back to and saying, hey, like you said, it's really painful if the markets are up 20%, you're down 20%. Now you have to make a 40% difference to even get back to where basic market returns were. And it's really painful to stomach that stuff. But like you're saying, if you're convicted toward these companies, make them that percentage weighting and just be patient because those are the companies that can shoot up 1,000%. I mean, those are the companies that can go to the moon for whatever reason. But it's just a matter of, I think most people didn't appreciate how much stocks could go down or how long they can go down for. I noticed that Everything Money mentioned this, a good YouTube channel, but it's really important to understand stocks don't have to go up. I'm like, I find it always funny that people just think because they're buying these small cap, high conviction trades that for some reason, any catalyst can just push it to the moon. When you look at something like Micron, man, like Micron is a great example of being one of the greatest stocks in the dot-com bubble that still to this day hasn't peaked back toward its dot-com bubble high. And that's a
Right.
company that during that time period, if you told somebody, hey, look at Micron. If I told you in literally 2001 this company in 20 years was going to be doing 10 times the revenue, 10 times the earnings, but it's still not going to be as high as it is today, you wouldn't believe me. And I don't think people appreciate that when they're buying these companies, there's no reason for them to go up. Like there's nothing that says that they can't flatline for the next 10 years and
Right.
never go back to their all-time highs. So I think people have to appreciate that sentiment that it does take a lot more than just a good catalyst or something to just push a stock up. It's highly dependent on obviously share dilution, you bringing in new investor eyeballs, like actually offering EPS numbers that scale. Like there's just so much that comes into play to make a stock go up. And again, the stock market right now could go into a 2 or 3 year downtrend or flatline, right?
Yeah,
There's nothing
definitely.
saying that doesn't happen either, which is why I love dividends. I mean, I hold 4 stocks that don't pay dividends: Bitcoin, Google, Facebook, and Tesla, and that's it, right? And I cash flow off the rest of it because I recognize that cash flow is going to be very prevalent in market times of volatility.
Right.
So just remember, there's no guarantees in life. There's no guarantees you're not going to die tomorrow either, right? So just take everything with a grain of salt, man. It's there's no guarantees, for sure.
Definitely. And you brought up the .com, and I was thinking about this the other day, because people compare these crazy valuations to the .com era, but I feel like we're in a completely different ballgame here. Like, what do you think with big tech? Let's say over the next 5-10 years, Google, Apple, Microsoft, Amazon, Facebook, Tesla, maybe Nvidia. Like, I feel like those are all top 10 tier companies at this point. The difference we face now between as opposed to .com in 2000, everything was future hype. They weren't actually delivering. Whereas now you have these companies that are delivering on a scale that we've never really seen before, with like profit margins and moats and just businesses that I don't see how a competitor can come in and take them out. It's definitely not an overnight thing. And so while you have these crazy profit margins, these crazy cash flows, these companies are basically like monopolies at the end of the day, which enables them to pursue all this crazy future growth and like you said, like investing in Tesla is earlier, like you're investing in all these different startups basically, but they have the money to, they have a steady cash flow to fund it. And I feel
Yeah.
like we've just never really seen something like this before. I mean, you go back to 2000, the biggest companies were, Exxon and GE. And like, this is just, they're just on a whole other level. I don't see really, you could probably buy all these big tech companies and you'll do great. I mean, the only threat I see is maybe government breakup, but at that point, they'll still do great. You're going to own a bunch of different segments.
Yeah, so when it comes to big tech and where I see the future going, and I'm looking more or less out for the 3 to 5 year term because I always feel like you're gambling and speculating if you're looking 1 to 2 years out. It's too hard to gauge out what's going to happen, and anything black swan events, you have no idea. But over a 3 to 5 year term, what I know for a fact is going to happen is that the internet hasn't met max saturation yet. The 30% of the world's population is only just starting to get access to the internet thanks to things like Starlink and all these new innovations in globalizing the internet infrastructure. So, on top of that, supply constraints is another thing that I think is going to lead us into the next bull market. Because, I mean, Apple, all these companies are saying how much money they're losing because of supply constraints. And look at the money they're still able to produce. I mean, it is astronomical the numbers Apple's pulling off in a period when they said, hey, we're losing like $13 billion to these supply constraint problems. And it's just like they saw that on their iPads, a lot of other products. And I just feel like people aren't maybe under anticipating that once we get to the other side of this in the next 1, 2, 3 years, that's when you're going to see like real market saturation behind the true potential of these products. Like look at Nvidia, right? Like Nvidia is a company that's been growing quarter over quarter at an absurd pace, and they can't even get their product out there. Microsoft can't even get Xbox in the hands of games or just people that want to play games right now. And look at the numbers they're still able to pull in. So yeah, I think they're largely overvalued today, the vast majority of them. And I think we're starting to see somewhat of a correction to some degree. And that's obviously offered by the volatility, the slowing down of earnings for this period. A lot of that's going to come into play, but but we're talking 3 to 5 years out. I don't know how you can be bearish. It's too hard from a globalization standpoint with the internet, and then to tackle on the fact that we'll hopefully get supply constraints worked out because that's going to bump another 10, 20% of the bottom line. I don't see how it doesn't. And again, how that comes into fruition, I don't know, but I really feel like we're still in a bull market and we're still in a rapid pace of innovation. And I always kind of relate us to being in one of the greatest growth periods of our generation. And I'm kind of annoyed that people don't recognize that enough because when you go back to, say, the 1800s and you looked at the pace of innovation and what that did to the Industrial Revolution, whether you're talking about the first printing press to the first steam engine, and you start looking at how long those innovations took to take off, from like the first auto to the first plane, and then taking another 30 years to globalize the aviation industry. Right now, what we're seeing is the compounding rate of that growth. We're not talking about technological advancements happening over a 10, 20, 30-year period. We're talking about technological advancements happening over a 3 to 5 year period. I
Right.
mean,
And
look at genetics. Like healthcare, for example, man, like they just put a pig heart in a human for the first time by genetically modifying it, thanks to the advancements of AI and genomic research. And what that's going to do to the healthcare industry is going to blow it up at a pace. Because again, you don't have to wait on a list. Inevitably, in the next 5 to 10 years, you're not going to be waiting on a list to get a transplant. You're not going to wait for a guy on a motorcycle to die. That's not just in the auto industry or not just in the healthcare industry. I mean, we're talking about everything from utilities to the financial with blockchain, and like every single industry right now is going through a technological jump at a rate that has never been seen before. And what that's going to do is it's going to continue to lead us into this insane bull market. Again, it takes time for this to evolve, but it's happening faster than it's ever happened. And don't underappreciate the markets because shit's getting real and it's getting real fast.
right, and you've got, just such a convergence of multiple S curves, and the rate of technology and innovation just continues to, double at a faster rate. I mean, yeah, absolutely, like crazy things are possible. We're gonna see some awesome stuff in the next few years. I'm excited for.
Yeah, man. It's like I said, I just if you look at the facets of what's going on here, it's honestly astounding. It's a marvel that we're living in this time period, and I think people are too narrow-minded or they're too stuck in the U.S. And I don't like beating down a lot of U.S. people, but they don't get out of their bubble. They're not globally diversified. They don't
We
own
are
like
pretty stubborn.
they don't have any like multiple currency exposures. I think that's the benefit of being like a Canadian or a European or somebody that's investing in the US outside of the US market. And I'm not downplaying like all US people. I just feel like when I look at US portfolios, it's far and few in between that offer any kind of diversification from a currency standpoint or anything. And they're very I don't know. Maybe I don't know. Maybe it's just because I listen to some smaller investors, because some of the larger guys know what they're doing. But from a standpoint of innovation, I just think people are under anticipating literally every aspect of their lives changing in the next 5 to 10 years. Literally every aspect: financials, healthcare, autos, all of that, and it's only going to happen once in our lifetime. I think what we're going to see is the infrastructure update in this major technological jump that we'll see in the next 5 to 10 years, and then we'll see that start to saturate and continue to build out the revenue streams. But once those jumps happen, they're done. I mean, we're not going to go from internal combustion engines to electric vehicles and then go to something else in the next 10 years. That's not going to happen again. We're not going to see blockchain revolutionize the banking system and closing houses and how we deal with stocks and financial trades and smart contracts. That's only going to happen once in our lifetime. So I hope people appreciate it and see it for what it is and recognize that they shouldn't be missing out on the greatest opportunity of their lifetime, and they should take a breath back and really make sure they have exposure to it, because I guarantee you, come back to me in 10 years and your future self is going to be shaking your hand from today being like, holy crap, you recognize this. You didn't sit on your hands, you didn't watch the world go by and you took advantage of it. I think it's a good note to finish on.
I was gonna say, well said. Like perfect place to end. Well, thank you for doing this today. This is awesome. And where can people find you?
Yeah, they can watch my YouTube channel, Passive Income Investor. Honestly, I just do this for fun. So, I mean, if they want to come over, they can. They can keep listening to yourself, obviously. But yeah, I just appreciate coming out, man. So if you guys want to
Yeah.
watch my YouTube channel, by all means. But definitely appreciate your time, man. It's always fun. That's
Thanks
linking
for
things up.
yeah, thanks for coming. I'll definitely link to your channel in the description below. All righty, everyone. Thanks for watching. We'll see you next time.